What's going on, peoples? Another day, another crypto. Been kind of a slow day, to be honest with you. Slow day. But hey, what we live for. Says the guy who missed the long. Oh, dude, right in my heart. Who missed the long? There we go. I feel like the camera's a bit off. It looks like I'm in like a black box site for the United States government, just chilling in some like undisclosed location. Got that fluorescent lighting type feel to it. But I can't get the green screen to work unless I get some professional light set up again. Well, I'm letting my sister borrow one, so I can't have the dual angle. I just got one right in front of me. That's all we got to work with. But no, I mean, at this moment in time, it's kind of a fight. So on the smaller time frames, we have this ABC to the upside, which currently right now we are coming back below its resistance. As well as that, we have the bullish ABC on a little bit higher time frame here. So, I mean, we're kind of caught in this in-between zone at the moment. Definitely, we're further towards the bull side, but at the moment, this little range right here might turn into another battleground zone. I don't know, but it's definitely in that ranging type feeling at the moment, which, hey, now that we're doing a little bit of scalping, if we do get stuck between those two levels, maybe that'll be some good scalps. That's what we're hoping for here. All right. If nothing else is going to happen and price is just going to stagnate for another 2 months, you never know. You never know. All right. So we can approach this angle, you know, this chart with 1,000 different angles. So we could go, oh my goodness, we're just hitting the top of the uptrend. Or you could draw it a different way and you can go, we're breaking from the downtrend. You know, we can look at it. So daily MACD has confirmed to the upside. All right. But we can see sometimes it doesn't won't last so long. So maybe this one won't last as long as anyways. But I go over here and I pull out the 4-day. All right. 4 days confirmed to the downside. 2-day is trying to get to the upside. Whereas the weekly is trying to confirm to the downside. This is why we don't like using these types of indicators. It just causes so much confusion. All right, so MACD I don't think is going to be the move for this one. But yeah, just from like a simplistic standpoint here, we have, especially on ETH. ETH is particularly more dangerous in my eyes. So we have the long time frame ABC. All right, resistance at 2032. And then on the smaller time frames, we have a small time frame ABC. We actually have two. So I mean, we have basically two resistances, which were still above one. All right, we would have to break through 1962, and then of course break through 2032. Now, I mean, if ETH can get back above 2032, we can definitely start talking about possibly coming up and testing 2051 or 2451, my bad. And then obviously these higher ranges here. I don't see it, man. I just don't see it. Maybe I'm an old head. Maybe I just don't get it. Maybe I'm missing something about NFTs, banks, yada, yada, debt ceiling. There's so many different reasons that people are coming up with bullshit. I don't know where it's going to go. Now, at this point in time, based on all my other trades, the probability is still to the downside in my eyes. But if I'm missing something, let me know, I guess. All right. So I'm still definitely in the bearish camp for sure. What's your highest profit and loss in a single trade? Probably $14,000. Now on my macro portfolio, like my personal, much more than that, but those are not disclosed. But on the challenge portfolio, $14,000. And it was actually on a scalp trade. I had 3 buddies sitting in the room and we would do this thing where like maybe every couple nights we all just sit down and try to find scalps. And yeah, it was that point in the bull market where I was just willing to do anything. And I made 14 grand in a scalp trade that probably lasted only about 20 minutes. Really good feeling. But once again, at that point in time, I wouldn't say like I had like a scalp plan. I didn't have a thought out trading plan with statistics backing it up. It was just kind of a Hail Mary trade. It was fun, but it was gambling. So it's not necessarily something that matters to me in the grand scheme of things. It's just something that happened. Now, I mean, today I'm having a little bit of fun. I'm definitely playing I'm playing on the 1 minute chart, taking some ABCs. Nothing crazy. Very tight stop loss. And just looking for a retracement back down, hopefully on a larger time frame, trying to confirm that A to B to C. Because if the market does want to continue up from here, especially on Bitcoin is currently sitting below its resistance, whereas Ethereum is actually sitting above it. Now, let me make sure I tighten this up real quick. It's like it's dancing along that edge. It's basically touching it right now. It's been going back and forth. So a little bit of an indecisiveness. Now, definitely on BTC, I mean, if we're looking at a smaller time frame, you can go ahead and mark out an ABC, but it is what it is. Now, this is literally just a for fun trade. I am not trying to transition to 1 minute time frame scalps. All right, when it comes to the little statistic portfolio that I'm working on, trying to see if I can find something that's viable to have something to do on streams rather than just talk about the macro all the time. Unless we extend up a little bit further, I don't know if I'll be, I doubt that I'll be taking, you know, an A to B C here on the 15-minute time frame. Just doesn't quite seem right unless we kind of extend and fatten up that B. Especially because I don't have the statistics to back it up yet, but I have a feeling like anywhere between like 12 to 15, 20 hours between A and C is probably the move. And if we were to just like drop down in the next hour or two, it'd only be like 8 hours. And I forgot which, I think this was it, was the timing on this here. And this was about 6-7 hours from A to C. And that one ended up not working out. Could just be randomness, but I'm just not quite convinced on it yet. Not quite yet. First, my dude, thank you for being first. I can't say a name, but hey, thank you for being first. Sky Knight, what's going on? Carlos, what's up? Tom, I'm doing well today. Like I said, just slow day. Just hung out. Like I have some plans that are up in the air. I was supposed to be maybe meeting up with some friends tonight, but might not look like it's going that route. Which sucks. But hey, it is what it is. Fish, knock it off, buddy. Can people not knock on doors in this house without you getting in a big hubbub? Huh? Stop. Trevor, what's going on, man? You check out L-Bank? I've had it kind of on the back burner because it does seem cool. All right, I mean it's a very similar UI to Bybit, and I like how they straight up explain it. They got hedge mode up on here. The leverage is up here. They offer up to 125x. I doubt that will ever be used by my community. Shouldn't be, but it's there. I haven't checked out. I mean, they got a good amount of coins on here. I didn't see Cadena, but maybe one day we can petition them to get a Cadena up on there. That'd be nice. Cadena, L-Bank, you listening? Cadena. They got spot. They got derivatives. They're not really the highest volume, but they've been around for a decent period of time, so there's that factor. I just need something to trade. All right. So I'm still using DYDX. That hasn't changed yet, but definitely because of the hedging problem and having multiple accounts, which technically wouldn't be an issue. You just switch up your wallet real quick and then boom, bada bang. But it would definitely be a lot easier on that website for sure. Haven't made the switch yet, but maybe. Please. Please, 1 minute time frame, gods. Don't do this to me. Now it's a little bit different on DYDX. We put in a higher high. I took the trade. We've been just ranging all day long. Took this trade about 3 hours ago before it actually started doing anything, and then we're right back up to where we started. But hopefully it's just starting to pick up volatility. I mean, at this point, it's definitely looking like this is just going to turn into an A to a B, and then C right there, for sure. But at this point, hold it or lose it. When flying kiss, is that like a kung fu move, like the flying kiss? The weekly on Ethereum is a lot different situation than BTC. Well, I guess not. They're both kind of in the same ballpark. We've definitely been putting in the bearish divergence here on the histogram. And I mean, it's testing. So I mean, if we fail here and momentum curves, I mean, it's just what we're expecting, to be honest with you. Like I said, I like whenever I look around, I feel like I'm in the minority to be bearish right now. But like, I don't understand the overarching bullishness. I really don't. So like I said, maybe I'm just an old crypto guy. I don't know. We're bullish. I'm bullish. Crypto G. Not exactly had a shirt to stop loss yet on L-Bank. I mean, it seemed like it was in there. I haven't deposited anything yet, so I can't really comment. But I mean, you have market, so like you can do plan, which is basically just a conditional market, trigger price, amount. On market, you have stop limit long, stop limit short. I was assuming that was the stop loss. Yeah, you have take profit trigger price and stop loss trigger price. But why is that not on the plan mode? Huh. What's up? I'm streaming. Fish is my stream guard dog. I mean, like I said, if I would be bullish right now. And we were bullish back at like 16.3K because there's no real other option. We had bearish hedges, but we didn't have like any like thing really telling us we were going to go down to 10K. So we had the bullish hedge. We took it, made some money. But if we were in an Adam and Eve pattern on BTC and we were holding above resistance, like, yeah, I'd be bullish. But right now we just have Eve, not even an Adam. And we're like Ethereum. Ethereum had a perfect Adam and Eve cup. And we tried breaking out, but we're failing. And we are creating resistance and possibly another resistance. We're creating resistance and resistance. And struggling to continue to put in higher highs. I mean, it just doesn't make sense for me to be bullish. I don't understand why why do you need to see 48K? Like, what does that change? I guess maybe it's just hodlers and they want big numbers. Why don't you close half positions and put to break evens? Don't take losses on winning trade, bro. I'm trying to get a winning trade. I'm not trying to get just a little bit of profit. That's what, like on the macro portfolio, that's what we do with hedges. All right. So there is no need to go ahead and take half profit. All right. Once we have a good 10 R&R, the market shows us that we can take either a long or short hedge. We lock up that profit. And then if the market's so kind enough to go ahead and give us a new position to be bearish from, then we go ahead and close the original short, take the new one, shorten that range up, continue. I think if you listen to professional traders, it definitely would do you good. The problem is people are so eager to take half profit. Or if they have been having significant losses, if they just break even and they're back where they started, they take profit. If you don't let these things really work themselves out, and when they are able to make a really decent amount of profit and you keep selling for minimalistic profit, your losses are going to continue to eat you up. It's an inevitability. So hold your winners, make sure they are paying out dividends. And that's why we have stop losses. All right, from the get-go, when you open a trade, you should be comfortable with the loss. I know that's a very big thing that everybody says, but it seems like if you're having to move your stop loss at the first chance you get, what you're using is not actually something you're comfortable with. You're lying to yourself. All right? When I use 2% on a trade, I'll get stopped out 6 times in a row. I don't care. I'm not trying to break even. I'm trying to make money. How do you keep your white hoodies clean and tidy? I'll be honest, my sister does my laundry. I don't have to do it. I'm assuming bleach. And if you get like a big stain on it, all I got to do is just put it in the bathtub with water. Make sure you soak it. Don't let it dry. How does hedging lock up profit? All right, let me show you. So for example, let's say if the market goes up, puts in a short position. We go ahead and we take our short. All right. To pretend to know where the bottom is going to be is arrogant. So let's say we're using a 2% stop loss, for example. All right, so the market's going down, 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 down. And while it does so, the market puts in the opposite position. To me, that's a signal that the market has a chance to be bullish. So at that point, I go ahead and I lock up the long position. Set up a 2% stop loss. And let it go. All right, so I don't pretend to know where the market's going to go. If you think you know where it's going to go, once again, you're arrogant. All right, so most typical traders will look at this scenario and go, you're not making any money. No, I'm not making any new money. The money has already been made. What I'm doing is setting up a chance that if I'm wrong about the market continuing to the downside, and once again, wrong phrasing. It's not that I'm wrong. All right, market gave me a signal. I'm riding it out. I'm not trying to make a decision whether or not I believe that the market's going in that direction. It's about listening to the market and just letting it do what it do. All right, so on the off chance that the market returns back up and surges past my original position and my original stop loss, all right, let's say that I was up $100 in this short, $100. All right, down here, this is up to you whether or not you take a equal position or you take an equal position based off the new margin of the portfolio. You could, if you had $1,000 and that short is adding $100, base the risk off of 1,100 rather than 1,000 that you started with. Up to you. All right. If we start turning up and this goes into $100 worth of profit, this lost that $100 worth of profit. So yeah, while I'm sitting in that range, I'm not making any new money. Okay. But that's not the point of what I'm doing. It's about securing profit. All right, because we don't pretend to know where the market's going to go. We want the market to go and run as far as it possibly wants to. Once it gives us some sort of signal that, hey, we're starting to see some support here, that's when we go ahead and lock up the profit. Now, the golden scenario, in my eyes, is the ability to take advantage of this situation and take profit or partial profit. All right, it's not about having this position, and then once it gets down to a certain point, taking half profit on it because I'm scared that it's not going to continue without the market showing me a distinct point. Hey, seeing bullishness, Doesn't mean necessarily take profit, because that could be a momentary sign of bullishness. It might just be a simple retest. It might not be a complete reversal. So we take the chance, we take the hedge, but the golden scenario is it is just a retest. Okay, so market comes up, and then right here comes back down, comes back up. So although this doesn't sound like it's making you a lot of money, when the market gives me a new position, that shows me that the market is now bearish from that position. Why am I continuing to hold this one if we're now bearish from a lower point? So what I do is the trade jumps. I go ahead and I take profit on the money that was made during this range, and then I reopen the position here if the market comes back down. If it doesn't come back down and I continue holding the long and I don't enter another short. So that's the whole thing. You're now able to take partial profit on this trade while also having a good running trade. And you're trying to get and capitalize on trends. Now, I mean, when people think of hedging, okay, they don't think of it in the way that I just talked about most of the time. The way that they think about it is they're thinking about, I don't know, maybe a YouTuber that's being disingenuous, or a pattern like this, where price is going up and down, up and down, up and down, up and down. Now, although this could still be a good means of hedging, all right, it doesn't necessarily if you do it wrong. So let's say that you have, you know, a pennant pattern. All right, you go ahead and you set up your stop loss down here, and then you set up, you know, most of the time with patterns, you're measuring the opening of the pattern, and then that's your take profit. I don't blame it if that's how you do it. All right, just have a system, make sure that system statistically works. Okay, if you're having an imbalance between your win ratio and your R&R, you're doing yourself a disservice. So let's say that you have a 10-win ratio, but that's with 100% margin. If you were to take all of that profit, if you take half profit at 5, and then you take the rest of it at 10, you're not getting a 10 restored ratio. So if you write that down, you're going to have an imbalance. All right, but let's say that you take a long position from here, and you take a short position from here. If you are using a stop loss, right, you have a decent hedge where either way the market goes, you're going to make money somehow. Might not be the absolute epitome of profit, but it's really just a small stop loss. You're not losing that much. Now you could go, well, I could combine the two trades, and if I use that much margin, I'll make even more. Okay, if you want to do that, be my guest. Not going to work out. All right. But if you're using like stupid stop losses, or you're not using stop losses at all, and you just start getting cold feet, and you're like, oh, we're starting to slow down to the upside on the breakout, maybe we're going to come back down, and you start doing that kind of move, that's when bad stuff can happen. Now, like theoretically, this hasn't happened yet. All right, we always have some sort of hedge or reason to get out. All right, I'm not saying hold on to the trade forever. All right, this long position from down here. All right, let me get the object tree and clean this up a little bit. All right, so on the macro chart, we had downtrend, downtrend, uptrend, downtrend. So ABC. All right, this is marking out a support region here that if we come back above it, that's signs to me that the market is showing bullishness. All right, we're trying to surpass the support, but failing to do so. Basic terms. All right, so this is a very large time frame. So of course, when there's larger time frames, there's larger discrepancies in how the market can move between that zone. So instead of just taking a long trade along that line and having the market go up and down over and underneath it, because when you're working on that large of a time scale, there can be large fluctuations. It's not set in stone. All right, we go ahead, and if we spot a bullish ABC on the smaller time frame below that, that could signal that it's going to try to go for a retest. I went ahead and I took that one. All right, I held that trade for a very long period of time. So at that moment in time, it was this short position, all right, from the FTX dump. So when I was in a short position from the very top of the FTX dump, I didn't need to know that FTX was going to fail. The market showed me it for some reason. We were starting to create resistance, all right? And if I would have said, I'm going to take half profit as soon as I hit 3%, you never know what's going to happen in the market. You never know what news is going to happen. So why try to play upon that and think that it has to stop at a certain point? So I let the short run all the way down. I didn't know if that was going to put us past the point where we're going to see 10K. I didn't know how much FTX was going to affect the market. So why pretend and take profit? So instead, we hedge. So now between this region and this region, the profit is locked up. Let's say, for example, I made $1,000 going down. I take an equal margin long, and actually an equal margin long would actually make you more profit because just the imbalance between short and longs. So at that point, if we return back up to where it was, well then, I'm still in that $1,000 profit, and then you can continue to hold it past that point, and then up here you would have A to B to C, and you could hedge there. Now, I don't need the market to have an ABC and then the market come back down below the A in order for me to take profit. So on the FTX short, I took profit here. Okay, we didn't come back below this A. Okay, this one right here. But I just need the setup. All right, if the market was going to be bearish, it would have been bearish from that point, but it wasn't. Okay, macro is showing me that there's a possibility for some bullishness. All right. So that's obviously where I'm leaning, but I don't ignore the smaller time frame patterns, even right now. Okay. I am definitely bearish for sure. Like that is where my macro is leaning from my strategy. All right. And as things are progressing, it's getting worse and worse in terms for the bears. I mean, for the bulls. But it doesn't mean that I ignore the fact that we have a bullish ABC on the smaller time frame. Not at all. All right, I'm hedging with that on spot now, all right, but because I don't have the ability to really hedge properly the way that we used to on Bybit, but if we move to LBank, then might have the opportunity. So right there, I'm able to take profit on this entire area and then capitalize on the long from that moment on. Now, the whole point of trading is compounding. Okay, you don't want to be holding the same trade forever, of course. All right, you got to take profit at some point, but you have to make sure that profit is worth your time. Okay, so for me, I'm looking for 15 R&Rs, 20 R&Rs. I'm not looking for little tiny 1-to-1 R&R moves. Now, on a scalping time frame, that could be viable. Okay, because of course you're trying to increase your trade frequency. All right, and you're not so much concerned with trends on that time frame, but on the macro you are. So depending on what strategy you're playing, I get why taking half profit or not hedging might be the ordeal, but I don't believe in half profit. I believe in letting things run. Now, trailing stop losses, I don't think are a good idea. It's not something I use. All right, like I said, when I set up a trade, I know what I'm going to lose. So it's not an issue. Once I pull the trigger and I enter that trade, I've come to terms with that money is lost unless money is made. Simple. All right, I'm not trying to conserve every single last dollar. Now, when it comes to scalping for me, all right, I'll find out if a certain stop loss to R&R strategy has a certain win percentage. Okay, I'll make sure that's profitable on that. And then we'll go ahead and go, all right, what happens to the strategy if we go for 4 R&Rs? And I'm just going to test it out. I'm going to see what is optimal. Because even though your win rate might go down, your R&R could go up quite a bit. So if you have a 20% win rate, but you're getting 10 R&Rs, you're making some good money. But if you're getting a 50% win rate with 1.2 R&Rs, well then, you're not really making a whole lot of money. You're pretty much breaking even. Astro, if you're using the word dangerous for your stop loss to be hit, that's not a good sign. Not a good sign. Unless you're specifically talking about hedging, which if you apply what I just applied to the smaller time frames, it's not that it wouldn't work. The problem is the volatility. You're not gonna, I don't tend to see very well structured ABCs on the smaller time frames. They're there. We can spot them, but there's a lot more volatility involved. But either way, you have a stop loss. So you should not be using the word dangerous when it comes to stop loss. You should not be using the word dangerous when it comes to leverage. Okay? Because all leverage is, first and foremost, is for portfolio exposure. Being able to use a large amount of your portfolio, but have a small amount of it on an exchange in order for it to be used as liquidity. All right. And beyond that point, if you're using a risk reward calculator, you know exactly what percentages to be hitting to make sure that you have a predetermined loss. If you're putting in leverage and you don't know what the number will be that you lose when your stop loss is hit because you're just constantly changing leverage, not good, dangerous. All right. But if everything is used correctly, the word dangerous should never come up. Like I said, on Ethereum, it's kind of just getting worse and worse for the price action. Unless we have like a really good breakout sometime soon, it's starting to build resistances over on top of itself. Obviously starting off with this one. But if we get down to the smaller time frame, we have ABC, ABC. So we have two resistances that have been built during the price action going down. And obviously I have one major macro. Like I said, of course, not ignoring it, we have the bullish ABC. All right, as long as we're holding above 1785, if you are on the side of bullishness, you're good to go. All right, but that only lasts up to about 2034. All right, so I'm bullish up to 2034 from this ABC, but I'm not bullish in any sense from a macro standpoint. If we break back above 2034, then we can talk. All right, that's what needs to happen. Couldn't you technically get stopped out of both positions when you hedge? It has not happened to me yet, I'll say that. But let's go ahead and see what would have to happen in the market for that to happen. All right, in order for me to get stopped out of both positions, all right, the market would have to come up, knock me out of my short, and then come right back down within a matter of time where I cannot re-add my short position or re-add my long position. All right, because I don't know if you're thinking about this. If I get knocked out of a short position, all right, that doesn't mean that I just walk away. All right, if I have an ABC short and price is moving up and down over it, I might get stopped out 3 or 4 times. But if I win the trade, the R&R is so massive that doesn't matter. That's built into the strategy. All right, I don't walk away from a trade. All right, if the setup's there, just because I'm having a hard time with market volatility at that area, right, that might mean I need to increase my stop loss, all right, and factor that into my strategy if that continues to happen. But the trade setup's still there, all right? It's just like over here. All right, we had A to B to C, all right? Now, I don't know if I took it on ETH, but on BTC, this was when Russia invaded Ukraine, all right? Because I remember everybody was super bearish and it pumped, all right? I took the ABC long there and just kind of understanding where we're at. I said, okay, well, this is looking like a B. If we continue to put in a higher low, we'll probably go back up and retest this level, and then we might see a macro time frame ABC. All right, so from that point, let's say that you're taking the short position. All right, well, we came above it, came back below it, so you would have got entered short. Your stop loss wouldn't have been able to stay in this point right here, so then you get knocked out of your trade. If it goes back under, are you just scared? You don't re-enter the trade? No, you go ahead and get back in it, and then you ride it all the way down. So on BTC, we were short from 45.8K, and I held it all the way down to about 29. Yeah, I held it all the way down here, and then I got bullish. All right. Now, at this point, I did make the mistake of not holding on. And that's where, like, these things that you're asking me, it's not that it's some theoretical. These are things that I have done myself. And if I did not do them, I would be significantly richer. Plain and simple. All right, I took the ABC short from here. And then I took profit because I was very convinced that we might see another try to the upside. But we didn't. It was me putting a barrier on what I thought the market would do, but once again, I was arrogant. So if you put that barrier, you're never going to be able to experience massive profit where massive profit can happen. You're always going to be the guy that goes, I took profit with a 1 to 4 R&R, you know, on a 1 minute time frame. When technically, I mean, you would have played that 1 minute time frame if you had a 1-4 on it, R&R on it. Probably would have had like a 700. My highest R&R to date is 112 from a single leverage trade that lasted a day. That was on Cadena. All right. Wasn't the most profit. I think I was risking $112. I ended up making like 1,000. No, I was risking like $12. I ended up making over 1,200 something. That was ridiculous. But in order for you to get stopped out of both trades, it probably could happen on a small time frame. Like if you're playing on the 1 second, 1 minute time frame, you could probably see a whipsaw that just, like, you go get up for a bathroom break and then it just cuts right through everything. But on a hourly, 2 hour, daily time frame with these ABCs, that shit does not happen in minutes. All right, it happens over the course of days. You have plenty of time to put in your trades, monitor them, do what you got to do. You're not in any risk of that happening unless, like, we went into World War III and the whipsaw was so crazy. But I guess at that point, does it really matter? Like, you still have a stop loss, right? So as long as you have a stop loss, you are fine. The only time that no stop losses make sense is in a fractional reserve banking industry, aka the US dollar. All right, because you always have bailouts. They can always print more money. Crypto doesn't happen. It's not fractional reserve. You cannot go without stop losses. Even the biggest people need stop losses. You know who didn't have stop losses and is nowhere to be seen now? FTX. All right. I guarantee you that if there is any major crypto funds, to some extent, of course, they have way more liquidity to work with than the average person. All right. So definitely a lot more liquidity. Their stop losses are going to look different than most retail traders, but they're still using some sort of stop loss or hedging the market in some way. Oh, I definitely got kicked out. See? And that's okay. That is what stop loss is for. I don't need to be sitting there babysitting the chart and being anxious about what's happening. All right, when I'm close to my take profit, I like to watch it. It feels nice. But if I'm not close to my take profit, I really don't even pay attention on these smaller time frames. You set up the trade, you have a stop loss. All right, depending on your strategy. Like I said, for the smaller time frames, I do have a place where I'm gonna take profit from, but it's the very beginning of what I'm doing with this one. So I'm starting off with small time frame, small profit, 1 to 3 R&Rs. All right, makes sense from this standpoint. But as time goes on, if I find out that 1 to 3 is having a good win rate to R&R ratio, I'll see if I can extend that. Or if I only lose a couple percentage points on my win percentage, but I gain a whole extra R&R, that's significant. So that's what you're trying to go for. Yeah, we've talked about that in the past, Guy Knight. So like I said, you're not going to be holding on to the same trade forever, but more likely than not, before you get to any potential take profit point, except for like major dumps where like price can definitely go 40% very quickly, there's never really going to be a point where you have to do that. It's more up to the user. Like if you're sitting in some significant R&R, yeah, if you want to take that profit and you think that we're going to be hitting resistance soon, take the profit. But that's the key word, significant R&R. All right, if you're just going 1 to 2 R&R, time to go. Because you're very concerned about what the market's going to do instead of letting it do what it needs to do. All right, then you're never going to be able to hit any sort of strategy that really makes sense. But of course, like in the past, like I've said that in the past, if we hit 50%, there's diminishing returns on shorts. So I probably would. Because I mean, at that point, I'm probably sitting in a 20 R&R anyways, close to, with a 3% stop loss, probably somewhere around like 17, 16. But in the past, using a 1% stop loss, if you're willing to do that and put your money on the line, then you'll be sitting at a 50 R&R. Go ahead, take profit. That's a 50 R&R trade. All right, with a 50 R&R trade, you only need like a 2% win rate in order to make any money. Obviously, not every trade's gonna be a 50 R&R, but you get my point. I think if you're constantly hitting 1 to 10s, you only need a 9% win rate in order to break even. So anything above that, you're making profit. But if you're sitting at like a 15, 20% win rate and you're hitting like 10s, you're doing really good. Don't beat yourself up. Don't go on YouTube and look for these guys who are going, you need a 99% win rate in order to make money in the market. Doesn't make sense. Look at the math. Now with longs, technically you can hold a long as long as you want to. But even to that, like I said, the whole point of it is compounding. Sometimes it just makes sense to take a very large chunk of profit. Doesn't mean re-enter another trade just because you're taking profit on one. Be patient. So like on BTC, all right, I didn't hold the trend all the way up. I took profit around this area. Okay, so I entered here, took profit there. Very decent amount of profit. All right, it was like 1,300%. All right, But I wasn't like just trying to go and like enter a bunch of small time frame trades. I mainly waited until we had this one before like I really started like trying to really go for it. So I held on to it. Now, it doesn't mean that every single time you're going to get a hedge position. I did not get a hedge position on this long. All right. I ended up getting stopped out of this, and that's fine. All right. That's going to happen from time to time. But there was a good chance that we could continue. Or if we didn't continue, we could have made some sort of indication that we were going to turn around. Just because we didn't this time doesn't mean that you change up how you do everything. All right. You need to be willing to test your strategy for a very long period of time. If you're seeing actual degradation in the profit because of certain situations, all right, go ahead and try to figure out what you need to do. But I haven't seen that yet. All right. This type of situation hasn't happened in a very long time. I have not had dinner yet. So I had a small snack today at like 4 p.m., but it wasn't a meal. So I figure out something to do. I was supposed to start my fast today, but with just how the schedule worked out today, and I was supposed to go out to dinner with friends, I ended up not doing it. I don't know what I would get for dinner. I don't want to order DoorDash, and it's kind of too late to drive up to because all the good food is about 30 minutes away. Oh, like 20. More like, but you got to get on the interstate. It's interstate? No. It's just a highway. It's just kind of a pain to get to. You never know if there's going to be traffic. Now that I've kind of gotten out of the habit of DoorDash, it just feels so weird to like actually use it at all. I don't know. Maybe I'll just settle on McDonald's or something. Get something cheap. Fish. Hey, fish, buddy. Fish. Hey. Knock it off. Hey. Come here. Come here. I don't know what to do. He doesn't understand that other people live here. And he's been here for like 2 years. I don't know, man. Like every time I've gone to McDonald's, well, not every time, but there, I remember, I don't know if it's just nostalgia, but I feel like McDonald's nuggets, like 10 years ago, always hit. They were never bad. But it's nowadays, like sometimes they're just like disgusting. Sometimes they're not, sometimes they are. But I feel like back then, there was never a time. Cook something at home. I could probably find something to cook, but I haven't done a grocery run since I ran out of chicken. So I got to do that probably at the beginning of the month and refill. Chicken, rice, eggs, mashed potatoes, stuff like that. Just seems kind of morbid if you eat like chicken breast and like scrambled eggs at the same time. Like what if like they're related? You're just eating a whole family. The kids and the adult. Kai started a sous vide because of you. Now everyone loves steaks. See, I mean, doesn't it just make it too easy? Like it doesn't matter what you do. The only thing you got to worry about is like how you marinate the steak in the sous vide. That's it. Half the time you don't even need to do that really. So all I gotta do, like, I haven't really invested in it yet. So sous vide, perfect. I've been using just like a Ninja pan in order to sear the steaks, but I really want to get I know there's like a technical term for it, but basically just a blowtorch, which has like a thing to make sure that you don't get any of the butane on it to sear the steaks. That way I can get the perfect steak. Isn't there egg in the bread of a chicken sandwich? I guess, yeah, you're right. It just camouflaged. Yeah, like a sous vide ribeye. Man. Like so like a pound of ribeye. I think from like the Amazon Fresh that's connected to like the Whole Foods is like $20. And if you were to go get a ribeye from like a steakhouse, they'd probably charge you somewhere around like 35. And that's not even a full pound. It's probably like a 12 ounce or an 8 ounce. And the cool thing is like you can pre-cook. So like let's say you just bought your steaks. You know, you could if you know that you're going to eat 4 tomorrow, you can cook them today and then Once they're done cooking, throw them in the fridge. And then the next day, you take them out, you sear them, good to go. You might want to pop them back in the sous vide for maybe like 15, 20 minutes, just to warm them up. But then you're good to go. Ever heard of Crowd Cow? It sounds like a subscription service for meat. Am I right? That's my best guess. I don't know what it is. And dude, like for like an extra $10, you can like for $30 a pound, you can get fillets. And a sous vide filet, not filet, filet mignon, is you can cut it with a butter knife. I'm not joking. I cut it with a butter knife because we're out of knives. That's how just, you don't even need a knife. You just pretty much just tear it. I just like how many options it gives you. It's like you can really refine it down to the minute. You know, like if you get really tough steak, you can sous vide it for 16 hours and it'll come out like a, filet mignon. Just so many options. Such a great invention. I'm not going to pretend like I know the exact date. I probably want to, me personally, I probably want to do it more than like 1 or 2 days. Just because I'm cautious, but probably more. Just because you've pasteurized the meat and now you're cooling it down. So, germ cells can't really populate. So, I mean, it's probably good for a lot longer. And then you repasteurize it even after that. So it's probably good. But I probably would only do it if you're planning on eating it within 2 days. Possible retest for the 1617K on BTC Kite. What's your input? I believe that we are starting to put in a bearish top. We have to break through 25K as our first measure, 25.4K, before like I'm officially bearish. One, because that's just the previous support resistance. You can see right here, it was support, resistance, resistance. And as well as that, it is the macro ABC's confirmation of bearishness. All right. So 25.4K, that's what I'm looking for in the short term. All right. Now, I'm pretty confident that we will break 25.4K. I don't pretend to think that like it will happen, but in terms of probability at the moment, it's much more likely than us going through and breaking through all these resistances and going up to 48K. If we do, then 48K is more likely. Until then, no. Once we break through 25.4K, I'm really only looking for 20K, 19.6K. All right. From there, I'm more than likely expecting something like this to play out and then possibly a retest and then come back above. And I would be comfortable with that being the bottom of the bull market. I mean, the bottom of the bear market. All right. I'm not trying to be greedy here and ask for like 9K BTC. If it happens, I'm very grateful. But at the moment, this is more than likely to be a nice, higher low, double bottom, even eve, a little girl on girl action. And, Ethereum would have a very similar Adam, Eve, similar to what Bitcoin had before its 2016 bull run. So that's what I'm expecting. Of course, if we break through 19.6K and we continue to hold below it, then we probably would see a retest of, anywhere between 17 to 15.4K pretty easily. On the macro time frame, I do have a logarithmic curve set up based on the lowest touches here. I feel like this is decent. It's not something that I'm going to adhere to. Like if we get down to this level and we start touching that parabolic curve, I'm not going to be like, we can't dump from here because of this curve. If we go below 16.3, if we go below 16.3K, on a macro scale, the probability of seeing 9.8K becomes likely. Do I think it's the most likely? No, but it would definitely be probability. I actually have not tried fish in the sous vide. I've not tried cooking him. I've only tried chicken and steak. I'm very basic. I know you can cook vegetables in it. There's so many different options. I haven't quite explored all of them, but they're getting cheaper and cheaper. Like if you don't own a sous vide, you're literally wasting money at that point. Like if you don't like cooking at home, it just, oh God, I am such a shill for sous vides, but because they are actually worth it, it's ridiculous. Like I'm not out here trying to peddle a $7,000 reverse osmosis electrolyte adder to just get drinking water. It is $80 to get a sous vide. And then like maybe an extra 30 for a vacuum sealer and a tub to put the water in. And the cool thing is, if you're really lazy, you don't have to dump the water out every time you sous vide, because it's vacuum sealed in a plastic in a vacuum sealed bag. None of the water is touching the food. So why do you have to clean the water every day? Perfect invention for lazy people like me. Well, they've lost $4 trying to scalp today. So, I mean, if we put in a ABC right here, that'd be roughly an 8. I'll make $16 if that happens. If we continue to dump past it, I'll be very grateful. If we get a candle like that again. Look at that candle. Now that's a candle. I just gotta get one of those to the downside. I'd be very happy. I've never used the McDonald's app to get delivery. Am I still able to get the deals? Let me see what deals McDonald's got right now. What, the candle? Yeah, yeah, it just looks like someone got liquidated hard on that jump. All right, so I got a whole bunch of points, so I could definitely get like a free Big Mac or something. I got 18,000 points on the McDonald's app, which it sounds like a lot, but it's really not. I wish I had a Chick-fil-A where the McDonald's is, because I would tear that up. I lost so much weight eating Chick-fil-A and save so much money, which really sucks. I went to Chick-fil-A the other day, and I got my classic meal, which is chicken sandwich, slice of cheese on it, large fry, large Coke. Basic. And unfortunately, it's not as cheap as it once was. I wasn't expecting it to be. I would say it's still a better deal than McDonald's. All right, like if you get a quarter pounder, large fry, and large Coke from McDonald's, you're probably looking at somewhere around like $12.40. But at Chick-fil-A, chicken sandwich, large fry, and a Coke, you're looking at, and obviously you get way better sauce at Chick-fil-A in my opinion. You're looking at $10 and like 12 cents, something like that. But they have those like on the Chick-fil-A app, they have tiers. So like if you're a Chick-fil-A Platinum member, you're getting 30 extra points of rewards per dollar. So you can definitely make that money go a lot further. So they got 20% off quarter pounder with cheese, 40% off 10-piece McNugget, 20% off any purchase of $2 or more, $6 Big Mac, McCrispy quarter pounder with cheese, medium fries, man. Damn, they don't have a lot of good deals. They were having a bunch of deals where like you could legitimately just get like a whole other meal for like $6. You can get like 2 Big Macs, large fry, and a Coke for like $5-6. Dude, Chick-fil-A is so good. I have not sous vide wings. The problem with that, I don't think it would be bad. I just don't know how. I don't know how that would taste. Probably tastes really good because it's sous vide. But I don't know how I would cook it. Question for you, Kite. I've been eating healthy Greek yogurt and stuff, berries, steaks, veggies, and added the fasting times 9 p.m. to 11 a.m. So you're fasting. So you're fasting less than 12 hours? No. You're fasting like 13 hours, right? 9 p.m. $14 hours. Dude, I'm so lost. What? 9 p.m., 9 a.m., 12 hours, 10, 11, 14 hours. It's not a huge fasting window. I'll probably try to get that to 16. Been 2 months. I haven't stopped yet because I want to keep going. But from your research, what do you think? So it's proven that your metabolism goes up when you're in a fasted state. So you're not really so the problem with like low calorie diets is your body gets accustomed to it. So if you're constantly eating like 3,000 calories a day, all right, you're probably not gaining a whole lot of weight. You're probably just stagnant. And then if you go to eating 1,200 calories a day, first off, you're going to feel terrible. Second, after probably about a month, your body's going to go to that metabolic rate. You're only going to be burning 1,200 calories a day. Now, if you do extra working out, you can get that up. But 1,200 calories a day. Your heart rate's going to drop. You're probably going to feel colder. Your metabolic processes are going to go down. So I personally have seen a benefit to applying what bodybuilders do. So bodybuilders, they don't do fasting. They do now, but back then they didn't. So what they would do is they would have like 4, 5, 6 low carb days, and then they would do like crazy high carb days. What that does is it confuses the body and then ups the metabolic rate because you're giving it more energy. And then you go right back to the low calories. So I would, if you're used to fasting, you've been doing it for 2 months, adding a cheat day wouldn't hurt you. I think it might help you actually, because it might be able to increase your metabolic rate just a little bit. But as long as you're losing weight and you're on track, like, I wouldn't mess it up. That's just all anecdotal stuff. Yeah. Yeah, I am getting hungry and it's getting late. I think it's starting to thunderstorm outside, so I might want to get over there before it starts coming down pretty heavy. Let's go ahead and do some Wordle. Unfortunately, there's no real 15-minute time frame trades I can take today. I'm just doing like little tiny scalps for fun. I'm not really I'm still trying to play it intelligently to a certain extent, but really just having fun with it. But there's nothing that I can really take part in. When I say cheat day, it doesn't mean like pig out and like have like ice cream and everything like that. Of course, like if you want it, eat it. It doesn't mean like do it for no reason. It's just like if you're used to having 1 meal a day, have 2. If you're used to having 2 meals a day because of your fasting times, have a little bit of a snack. I don't know. You know, just try not to have super restrictions. And I would say like 1 cheat meal is probably best. I find myself that if I if I tend to do two cheat days, like Saturday and Sunday, I'm more likely to fall off the wagon than if I just do 1 cheat day and then immediately get right back to it the next day. If you're trying to find a leverage exchange, L-Bank is there. DYDX, you can use Apex if you want to go back to Bybit. I'm not quite sure how that one works, but there's options out there for you if you look for them. Audio Snake. You got 4 letters. Unison. I'm confused. OUS. There we go. Easy. All right, I'm gonna go ahead and hop off, go grab some food. I appreciate you. I'll be on tomorrow. Hopefully we got a trade set up for tomorrow for a small time frame. So I need to add more data. I don't have like a target for how many trades before I switch to an alternative testing method, aka like increase R&R. Figure it out as we go. Probably somewhere around like 40 trades. You need like a lot of data before you start doing stuff like that. All right. Good night, guys, or good morning if you're in Australia, I guess. It's early morning for you. I'll see you guys tomorrow. And yeah, don't take my example on playing on smaller time frames. If you do, treat it like fun, but still approach it with some intelligence. Like just use like a fraction of a % of your total portfolio and still treat it the same. 1/2, good stop loss, good R&R. It shouldn't be something that you're really looking to make a living off of. All right. But play safe nonetheless. All right. Let's go ahead and do the thing with my white pasty face. And I'll see you guys soon, okay? By those little indents that glasses give you, I can definitely feel them. I should be getting my contacts back soon. I'm very excited about it. Bye!